Today I'm talking to you, gig workers, side jobbers, and freelancers. And according to IRS data, there are more than 30 million of you out there filing as self-employed. Navigating the world of self-employment and taxes can be a complex journey, but fear not. In this video, I'll cover top tips and strategies and information you need to know to help you make sense of self-employment and your taxes to keep more of your money in your pocket. I'm Mark Steber, Chief Tax Information Officer at Jackson Hewitt. How do you know if you're an independent contractor, gig worker, side hustler, or freelancer? Well, according to IRS rules, if you work for yourself to make money or profit, then you're considered a small business owner and self-employed. This includes independent contracting, side gigs, hustles, and freelance work, full-time, part-time, even if you have a regular, full-time employee job. You might not think of yourself as a small business owner, but the IRS does. And the rules are clear, and doing it wrong means the risks can be large. So if you're making money by working a side job for yourself, that means you're self-employed. Therefore, you'll be required to pay income taxes, state taxes, self-employment taxes, and possibly other. But there's really good news. There are many benefits you may be eligible for that could boost your tax situation, including tax deductions, options on your taxes, and even tax credits, which is really a good thing. And these benefits are not available to a W-2 employee. Here are a few examples of some common independent contractor or gig worker type jobs that could make self-employment income. Rideshare driver, freelancing, internet selling, pet sitting and dog walking, content creating, so influencers and bloggers, yeah, you're self-employed. Babysitting, nannying and caregiving, personal or virtual assisting, selling goods at local markets and festivals, tutoring and coaching, and many, many more. What's the difference between self-employment taxes and income taxes? Well, when you are employed by a business, that business will withhold money from your paycheck. Money is withheld to cover your federal and state income taxes, but also Social Security and Medicare taxes from your payroll checks. Withholding is the money an employer deducts from an employee's gross wages that automatically gets removed and paid directly to the government for all of these taxes and likely some other benefits, like health insurance too. But that's another topic. When you work for yourself, you take on that burden and are required to pay those taxes yourself. This tax process is vastly different than being an employee. Federal and state income taxes are taxes you owe for, well, having income. Other taxes you can owe, like self-employment taxes, are an additional tax you pay above and beyond income taxes to fund Social Security and Medicare. These taxes are owed through a series of quarterly payments you make to IRS and states and are due provided you have net income. But more about that later. How do you know how much income you've made from your side gigs, and what self-employment tax forms will you receive from that business that you did work for? Well, each and every business that you did work for will generally send you either a Form 1099-K and or a 1099 NEC, a non-employee compensation form, postmarked or delivered by January 31st. These forms will show you most of all the gross income, not the net income you made from that business. When you file your taxes, you'll need to include all the 1099s and income, even not reported on a 1099, in your calculations on a form called the Schedule C, which is part of your 1040 tax return package, and specifically to calculate the net income from self-employment on which you then owe income taxes. Since you're self-employed, the Schedule C is a critical form. The Schedule C is a tax form used to report business and business-related income, as well as expenses you can take and deduct and reduce the taxable income amount. I'll get to that in a moment. As I said previously, the IRS considers you a small business owner. And when you're self-employed, that's a really good thing for taxes, not a bad thing. What are some business-related expenses that will impact your tax return and count as deductions? Well, first remember that the IRS considers you a small business owner. That means there are several deductions that can reduce your taxes if they relate to your work. The expenses you pay as you do your work, or to do your work, or to make money, are tax deductible. Deductible means those costs can be subtracted from the total income you made. That means lower taxes, and that's the goal. Employees do not generally have these deductions. For example, if you drive for Uber or Lyft, your car payments, cost of gas, and much more are part of doing your job and are tax deductible. A big one if self-employed, but not for employees, is the home office deduction. If you work in a home office, a place in your home where you do or coordinate business, the cost of your office is considered a tax-deductible expense on your tax return. You'll need to keep detailed records, including receipts, for all the expenses associated with your work. There are a lot of deductions you might qualify for, depending on the type of work you do. So I encourage you to do a little research and seek out a tax professional who can help. What are other common tax deductions available to gig workers? There are many expenses you can deduct, including advertising expenses, office supplies you purchase to operate your business, rent paid for equipment, storage or office space, banking and legal fees associated with your business, professional fees for things like bookkeeping and membership dues. The list is really endless and specific to your type of work activity. And there are many tools and tips and lists on our website and others. But the point is this: you need to keep track of what costs and expenses you incur and keep good documentation. In more good news, there are lots of resources out there to make it easier to keep track of everything. I would highly recommend downloading one of the many apps that track your income and expenses. Most will let you take pictures or scan your receipts, easily categorize them, and then save them to the cloud. A big time saver at tax time. When do you pay taxes as a gig worker with self-employment income? Well, small business owners and gig workers with self-employment net income generally might need to pay quarterly estimated taxes, meaning you send money to the IRS every quarter to cover the taxes on that money you made during the quarter. If you're employed by a business and get a W-2, they typically withhold money and taxes from each of your paychecks. But because you're self-employed, you need to handle that yourself on a quarterly basis. And just like employees, pay your taxes over the time you earn them, each paycheck for the employee, and quarterly via payments that you'll make to the IRS if you're self-employed. If you expect to pay more than $1,000 in taxes on your self-employed income for the year, and that's a pretty low bar, then yeah, you probably need to pay estimated taxes each quarter. You want to avoid underpayment penalties. Basically, when you file your taxes, if you've not paid enough taxes through either withholding or estimated quarterly taxes, you could be subject to an underpayment penalty. How do you figure out what you need to pay each quarter? Well, it's important to have a good estimate of your income and deductions for the year. One easy way to do that is to use last year's tax return as your starting point. Then you can either work with a tax professional to do the tax calculations or do them yourself using the IRS Form 1040-ES. Lastly, be sure to pay those estimated taxes by the quarterly due dates. Don't miss these payments, as you could face penalties, and I cannot emphasize that enough. The number one tax shock each year for self-employed people, full or part-time, is when they get to tax day and run their data. They learn they had a good year, but they did not make estimates, and all that tax comes due at once. And they might even have to pay penalties. This could turn a good business year to a bad day pretty quick. So if you're making money and you're happy with your side gig, that's a pretty good sign you need to be taking action and getting help if you need it. As a gig worker, how can retirement savings benefit a tax return? That's a great question. I think it's really important to save for retirement as a gig worker, or really any worker, but in particular as a gig worker, and for several reasons. Sometimes people start working in the gig economy just to get a jump start for their retirement, or even to fund their retirement plans. If you are self-employed, you have options for retirement plans even more than those who are traditional W-2 employees. I strongly urge you to look into solo 401ks, SEP IRAs, or a simple IRA that could work well for you. The tax rules for retirement savings are great for Americans and often overlooked to save taxes. But even better tax benefits and rules if you're self-employed. And since you're not an employee with possibly other benefits, doubly important to pay attention to. The various choices and options and considerations for what to put money in, how to save, how much you can contribute are well beyond this short video. But I'll simply say this. If you're working and earning, but not putting some portion of your earnings towards a qualified savings plan, you're making two mistakes. First, you're not saving money, and that's never a best practice for the future. And secondly, you're missing out on a host of tax benefits, deductions, and tax-free earnings that can jumpstart your savings and even boost your returns on your saved money. Finally, keep in mind, every year, the IRS defines how much money you can contribute to your IRA, and really all the benefit plan options. The limits depend on several factors, including the type of plan you have or are using or contributing to, your income, and your age. But the amounts are large and the tax benefits are great. All of this might seem like a lot to digest, and it can be. However, there are tax experts across the country that can help ensure you get all the credits and deductions you deserve. That can save you a lot of money, because if you miss a crucial deduction, you might be paying more in taxes than you should. There are many benefits of working with a tax professional, not the least of which is peace of mind. So if you're a gig worker, what questions do you have about what tax deductions you might be eligible for? Let us know in the comments section. And if you found this video helpful, please give it a thumbs up. Subscribe to our channel for more valuable information and hit that notification bell to stay updated on all things taxes. Thank you for tuning in. Schedule an appointment with a tax pro near you at jacksonhewitt.com to learn more about everything related to self-employment and your taxes.